Anytime there's a large series of claims or a risk market increase in business, you're going to find that insurance rates will go up over time. This is a really good example of a year which may have some increases in insurance rates. After we had major hurricanes or major natural disasters, the insurance companies will review their claims and they'll reprice their premiums to reflect what is expected to be future loss rates. So what you may not realize is when you purchase insurance from a company like Allstate or State Farm or any major insurance company, they have what's called reinsurance, where they buy insurance to cover the claims that they might incur over their policy period. So if they have 10,000 customers and they have a certain amount of claims, they have cash reserves for a certain amount of the claims, but then they purchase reinsurance, which insures them for anything in excess of that. And right now, insurers are in the middle of negotiations with reinsurers, which may have higher rates of 10 to 30%. Nearly 2/3 of U.S. property and catastrophe coverage renews every January 1st. So 60-70% of homeowners insurance has reinsurance that comes due on January 1st. And many of the large insurance carriers have to buy their policies on January 1st. And these reinsurers, these companies that insure the insurance companies, are reacting to 5 years of outside catastrophic losses. And the risk from storms and wildfires has gone up. Hurricane Ian is the most recent one. It'll probably be $40-50 billion worth of losses, most of which will be passed along to the reinsurers. And what they do is they insure the insurance company. If you buy insurance from Allstate, they have cash reserves and then they have reinsurance to cover the excess. Once these claims experiences are priced into the system, you may find that insurance rates are going to be repriced. Now, most states have statutes that do not allow insurers to reprice their filed rates just because of expected losses. They have to wait until they incur losses and then refile for updated rates and a new rate table. So there's a little bit of a lag time from when you have claims until when you have increased insurance rates. The fact that over the last couple of years there's been outsized payments through claims from wildfires, through weather events, and even social events, it may be the time where insurance rates that consumers see are start to go up. Remember, insurance rates are just a function of what claims are. The more claims you have, the more insurance rates will go up later. Not even your own individual claims. You may not have filed any claims on a policy, but your rates are going to go up because it's the aggregate of these insurance claims which affects ongoing rates. So as we've had more natural disasters, as we've had more social events, as we've had more an increase in lawsuits, you're going to find that insurance rates that get passed along to consumers may start going up over the next year or two as insurance companies refile their rates with their insurance boards. If you're an admitted carrier in a state and it's not a surplus lines carrier, you will be able to file new rates usually every year, and that's going to affect what rates you can charge to your policyholders, because as an insurance company, you're required to maintain good financial backing so that you're able to pay claims. The insurance commissioners in every state make sure that the insurance carriers that are admitted in their states, the insurance companies that are licensed in their states, have sufficient capital reserves to pay out claims. Because if you're charging too little for insurance coverage to your policyholders and you don't have enough money to pay out claims, what good are you as an insurance company? So the insurance commissioners in every state regularly will monitor the rates, monitor the financial solvency of these insurance companies, make sure that they have reinsurance backing them up so that they can pay out claims should there be a natural disaster. But those reinsurance companies review the financial landscape on an annual basis, and they'll issue new reinsurance rates that have to be factored into the premiums that consumers pay and business owners pay. So this is a pivotal year for reinsurance, and it may be discovered that reinsurance rates go up 10, 15, 20, maybe even 30%, and that will be something that will affect individual policyholders' premiums for years to come.